Dear students, in the last video of the deduction of total income, we studied up to ATC and the other aspect related to ATC. The fifth type of deduction in respect of investment made under equity saving scheme. If anybody has invested in equity saving scheme, which is said as per under section 80CCG, we call it as Rajiv Gandhi Equity Saving Scheme. Now it is applicable to resident individual only, right? The person who want to claim this deduction, he should be resident, and only individual can claim this deduction. Apart from individual, whether HUF, partnership firm, association of person, company, they cannot claim this deduction. Where an assessee who is a resident individual purchases the notified listed equity shares or listed units of equity oriented fund. For such investment, deduction is allowed. We can claim as a deduction 50% of amount invested in equity shares. Whatever amount he has invested, of that amount we need to take 50% or maximum limit up to 25,000. Alright. If he has invested some 1 lakh rupees, so 50% of that amount, that is 50,000 rupees, or maximum limit of deduction is 25,000. So in this, whichever is less is allowed as deduction. Right. So in this, whichever is less, like 25,000 is less, it is allowed as deduction under section 80CCG. Now there are two conditions. His gross total income does not exceed rupees 12 lakh. If the gross total income, whatever is there, GTI, if it is exceeded 12 lakh rupees, in that case, this particular deduction cannot be claimed. Second condition is that he has acquired listed shares or listed units oriented in accordance with, right? If he has acquired unlisted shares, right, shares of a company which has not listed in the stock exchange, such shares are there, or the units of oriented which are not listed, in that case this deduction cannot be claimed. Next is number C. Investor is located in period of 3 years from the date of acquisition is in accordance with the above scheme, right? He should hold that particular thing for minimum 3 years. Then the assessee is in a new retail investor in specified in the above notified scheme. So whatever scheme he has investing, he should be a new investor for that particular scheme. Then this deduction, assessee satisfies all the condition. So if he satisfies all the condition, then only he can claim that particular deduction. Okay, the next is deduction in respect of payment of medical insurance premium, which is said under section 80D. If anybody is paying medical insurance premium, right, so that medical insurance premium for medical health or health checkup, if they are paying, it is allowed as deduction. This deduction is allowed for individual and Hindu undivided family. For both the assessees, this particular deduction is allowed. Now the payment of medical insurance premium, if you see, assessee has paid a medical insurance premium in the previous year accordance with the scheme framed in the behalf of General Insurance Corporation of India and any other insurer who has been granted permission, contribution to central government health scheme, prevention with the health checkup scheme. So various things he has followed. Now the deduction amount in case of individual and HUF, what is the deduction amount? Actual premium paid, what is the premium amount he is paying, or maximum limit is up to 25,000. Whichever is less is allowed as deduction. This is in case of the citizen who is not senior or who is not a senior citizen, whether he is an individual or HUF. For him, actual amount paid or maximum limit of 25,000, whichever is less is allowed as deduction under section 80D. Now, in case of a senior citizen, if anybody is a senior citizen, their actual premium paid, whatever premium you are paying, that or maximum limit of rupees 50,000, 25,000 will get exceeded to 50,000. In this, whichever is less is allowed as deduction. Next is deduction in respect of maintenance and medical treatment of dependent who is a person with a disability, right? You are spending on medical treatment and maintenance of a dependent who is a person with a disability. which is said under section 80DD. Now, this deduction is allowed to individual or HUF. This particular deduction is allowed for individual as well as for HUF. In any expenditure incurred for medical, nursing, rehabilitation, or dependent relative suffering from the permanent physical disability, right? This expenditure, what they are doing, it has to be done for medical, nursing, rehabilitation, medical dependent relative suffering from permanent physical disability in that case, or despite under LIC unit scheme and other private insurer for the benefit of physically handicapped dependent. So for these things you can spend either for medical, nursing, rehabilitation, or permanent physical disability, or for the insurance, private insurer of benefit for physically handicapped dependent. For this thing you have to do. So what is the deduction amount? 75% is the deduction amount if disability is over 40%. If any assessee's relative or dependent relative, he is 40% disabled, in that case up to 75,000 you can claim as a deduction. 80% of the body is disabled, 80% of the 80% disability is there of the dependent. In that case 1,25,000 can be claimed as deduction. Now what is the important note here? The amount of deduction is fixed at rupees 75,000, at rupees 1,25,000, irrespective of actual expenditure incurred. How much expenditure you are incurring, that is not required here. Maybe suppose you are incurring less expenditure or more expenditures, they are not going to compare like 75,000 or 50,000, whichever is less, they will not compare, or they are not going to compare like 1,25,000 or 50,000, whichever is less. No. So in this case what they do is they will try to make it fixed. It is fixed. It is not whichever is less. It is 75,000 for 40% of disability of the relative, and 1,25,000 for 80% of the disability of the relative. This is fixed. Now this deduction is allowed only when the amount must have been incurred or paid or deposited. The deduction you can claim when it is actually has been paid to the hospital, actually it has been paid to nursing home, rehabilitation center, only then you have a receipt of it, only then you can claim this particular deductions. Right? Now what are the conditions for this? Assessee has disabled relative. First of all, he should be having a disabled relative, whether a son is there, daughter is there, brother is there. The disabled relative should be there of the assessee. Such relative must be dependent on assessee. Right? The assessee relative who is disabled, he should be dependent on assessee. Right? If he is not dependent on assessee, if he is dependent on somebody else, in that case assessee cannot claim that deduction. He should be dependent on assessee. Then disabled relative does not claim benefit under section 80C. So if any disabled assessee is there, the assessee should not have made any claims of benefit under section 80C. Right? It is not allowed. Similarly, medical certificate must be attached with the return of total income. The medical certificate of the government doctor and the certified medical practitioner, right, should be attached with the total income. Next is deduction in respect of medical treatment of specified diseases which are said under section 80DD. So this is also applicable for individual and HUF. Both the parties, assessees, they can claim this deduction. Assessee has incurred any expenditure for the medical treatment of the specified diseases or ailment of for himself or dependent relatives. Now there are different examples which they have given, like cancer is there, AIDS is there, renal failure is there, and like various other things are there. Now if any specified diseases treatment they have done, for that they can claim as deduction under section 80DD. So what is the deduction amount? Actual expenditure incurred, whatever expenditure is incurred, that they will take, or maximum limit is rupees 40,000, right? Rupees 10 lakh in case of patient who is a senior citizen of 60 and above, and rupees 10 lakh for very senior citizen of rupees 80 and above, right? Whichever is less is allowed as deduction, right? Actually it should be 1 lakh, right? Up to 1 lakh it can be claimed for a senior citizen, and up to, again, for a very senior citizen also it is not 10 lakh, it is above 1 lakh. Now deduction in respect of interest on loan taken from for higher education. If anybody is taking any loan for higher education, this deduction is allowed only to individual. It is not allowed for the HOF. Assessee has borrowed the money for the purpose of pursuing higher education for himself or his relatives. This deduction can be claimed. So here an individual is entitled to 100% deduction on payment of interest of loan taken for from any financial institution or any approved charitable institution for the purpose of pursuing higher education of the individual or his relatives. Right? If anybody has taken any loan amount up to 100%, it can be claimed as deductions. Right? The amount must be paid out of the taxable income. Assessee has paid interest on such loan during the previous year. The deduction shall be available for maximum period of 8 consecutive assessment years beginning from the assessment year. Right? So whatever loan he has taken till 8 years he can claim as a deduction under section 80C.